Bitcoin is setting up for a fall. Right now, there's a pattern quietly forming on the chart, and we're watching it develop piece by piece for confirmation of our sell setup. If it confirms, this becomes the trigger for Bitcoin's next major leg down, a break into brand new lows for 2026. Stay with us because by the end of this video, you'll know exactly what we're waiting to see. To understand why this setup matters, we need to zoom out and look at Bitcoin's bigger market structure. That's where the real shape of this move reveals itself. Let's go back to the last major high of 4 December 2025 at 99,000. Notice that number. It sat just under the psychological $100,000 mark, never quite getting there. From that high, 2025 closed near its yearly low, printed on 22 November at 80,523. Then, surprisingly, 2026 opened on a strong note. Bitcoin rallied hard into a peak on 14 January at 97,900. And here's something worth sitting with. That level has remained unchallenged as the 2026 yearly high for 8 months now. From that January peak, the floor fell out. A relentless sell-off took hold, driving Bitcoin down to a low on 6th February at 60,000 precisely. Buyers stepped in and defended that level, and by April, momentum began building again, enough to stage a rally into a high on 6th May at 82,791. But here's what buyers didn't see coming. We'd already measured the range from the 4 December high down to the 6th February low, and it pointed to a textbook Fibonacci 61.8% resistance level at 83,903. That number held, almost to the dollar. Buyers ran straight into a wall and walked into a perfect bull trap. The moment that 6th May high was in, sellers didn't hesitate. Price collapsed in a near vertical descent. By 5th June, Bitcoin had carved out a new yearly low of 59,128, breaking clean through the 6th February low that had held for 5 months. Buyers tried to answer, but their response was brief. A bounce to 67,278 on 15th June that fell just a few dollars short of our Fibonacci resistance zone between 67,502 and 67,583. And even if that zone had broken, 2 more layers were waiting above it. The 2026 anchored VWAP and a higher Fibonacci resistance zone between 73,119 and 73,144. 3 separate walls stacked on top of each other. Buyers were fighting a losing battle before they even started. Now here's where it gets genuinely interesting. After sweeping the liquidity below the 5th June low, July brought a fresh wave of buying, and so far that's produced a high of 66,882 on 21st July. Look at the weekly swing chart and something starts to jump out. Those 2 peaks, 15th June and 21st July, are sitting almost side by side. It's starting to look like a double top. But hold that thought, because we're not there yet. A confirmed double top needs one more thing, a lower swing high following this move. We don't have that piece yet, and that's exactly the pattern we're sitting here patiently waiting to see confirmation of our setup. So what happens if we get it? If that lower high forms, a completed double top projects a 200% measured move down, landing in a price zone around 47,790. But to get there, price would have to tear through 2 layers of Fibonacci support first. The first zone sits between 60,192 and 60,641. The second, deeper zone sits between 53,761 and 54,092. Break through both of those, and Bitcoin is staring at brand new 2026 yearly lows. And here's the twist. That could actually be where this whole move finds its bottom if buyers finally show up at React. So what's your call? Does Bitcoin have further to fall, or is the bottom already in? Drop your Bitcoin views in the comments below. Don't forget to subscribe for daily crypto chart analysis, where we focus on Fibonacci, market structure, and price action, not hype. We also publish a daily crypto trading newsletter, just a 5-minute read to keep your finger on the crypto pulse. Thanks for watching, and we'll see you in tomorrow's crypto trading analysis.